Yeah, so last week we saw some panic in the markets. Very volatile week. It was Monday up 4%, Tuesday down 3, Wednesday up 4, Thursday down 3, and then down another 2 Friday. Just absolute volatility. And we got that sharp move downward, and then that reactionary response, and then the H pattern kind of completed itself, or is kind of on its way to completing itself, as we're probably going to retest these lows. And right now we're seeing some crazy things out of the oil market. So the S&P futures are gapping, to below this trend line right here. We're undercutting those lows from 2 weeks ago. What happened in the oil markets? So they had a pretty normal OPEC meeting, OPEC is pretty much comprised of the Saudis and Russians, the two biggest oil producers in the world. And Vladimir Putin came out of nowhere and was just like, because of the coronavirus scares are ravaging energy demands. I'm not getting in this deal because only the U.S. American shale companies are going to benefit, such as, Exxon, Chevron. He's like, we're just going to absolutely flood the market right now with as much oil as possible and kind of kill everyone involved. Whereas half of Russia's economy is oil, so they're gonna get absolutely killed on the news too. Pretty much, throwing everyone in the middle of the ring and just lighting the circle on fire type thing, and whoever's gonna make it out alive, we'll see. It's gonna be very interesting to see how it plays out. But right now, that and the coronavirus are becoming like the perfect storm for the market. So we're gonna see a lot more of this volatility for the time being. Benny, still over there?
No, I'm still here. I'm listening.
All right.
Going off that, I think you want to pull up the SPY. I don't know where the futures are for below 284.
Yeah, we're
but
pretty much. Oh, it's below. What was that low? I know we're under. Yeah, 285.50 was that low. So that's kind of where we are. That area.
Yeah. So I think below that 284, we'll see some continued selling pressure. Then the next real line in the sand is at 272. In that area would be a technical bear market. Would be about down 22% off all-time highs. If we think back to the end of 2018, going into 2019, the market pulled back about the same, about 22%, and that was, again, one of the scariest times to get in. Also, one of the best if you were able to take advantage at that time. So those are some two key levels. Again, below 284, we'll probably see lower prices. Next line of the same would be 272, and then below that, there's really nothing stopping that retest of those 2019 lows, which if you look through a lot of the individual sectors, like even for like financials, VFH, for example, retesting that 2019 low is very realistic given where it is chart-wise for the SPY. The Dow Jones or the NASDAQ, it's a much bigger drop from where they're currently trading at. But we're seeing that theme is almost becoming somewhat realistic when 2 months ago that would have been, you'd been crazy if you would have thought that the market was going to hit, or retest 2019 lows.
Right.
A lot of crazy stuff. And then again, the 10-year at new all-time lows, almost trading like a penny stock, was down 23% on Friday, lowest it's ever been. So if you do have any high-interest debt, a mortgage that's above 4%, student loans 5 to 8% or higher, this is a great time, basically a slam dunk to refinance any debt you have and just get really cheap money. So that's definitely a big key thing. So again, for how scary the market is, there is always going to be somewhere that you can benefit. And if you have any debt, this is definitely a time to help fix that.
I was looking at the futures coming into this, and it looks like shit. But the one positive I got out of this was knowing that you would spin this to be a positive somehow.
Gotta be optimistic.
Yeah. Rolling 10-year period. What's next? What we got?
All right, so we'll